Hey, good morning, guys. Sarman Cool Trading Tools here. So let's get started on the market breakdown this morning. So we're going to go over a few things. We're going to go over the NASDAQ QQQ, still watching this tightening range, semiconductor ETF, which is not looking good. We're going to go over a few stocks on today's watch list and just kind of what I'm thinking about them and break down some of the interesting aspects about them, we'll say. So let's go over NASDAQ to start here. It's breaking down quite a bit here. We've still been watching this tightening range we've been talking about for weeks now, high, low, high, low, high, low, high, low. And now we're breaking, I think, really watching this low from yesterday. But I think the semiconductor ETF, which holds a lot of weight in the NASDAQ, is probably going to be giving us the most insight here. Um, like I said, nothing really to do with here. It's just something to watch. I use this as the broader market because it represents momentum more than the S&P 500 for the type of stocks I like to trade. But to me, it's looking like it's going to give a little bit of a test to test these levels again here. So, but let's use the SMH here real quick, and I think that's really where we want to be focusing our attention at for today. To me, it looks like it's ready for a move lower. We're gonna go over a couple reasons why. The price action is really telling us the story here. I mean, you can read this for a couple things. First off, the AI narrative change. We've talked about that in other videos. The AI narrative has been changing, and it's it's just not as positive as it used to be, and the market's reacting to that. But that being said, too, we've had this huge run. Now we've, to me, it looks like we've entered a distribution phase, been in a range bound for a little while, but now we're seeing the sell off, sell off, sell off, sell off. But then even the recent days before today's, what I think will likely be a breakdown, you see this day, this day here, and this day here. What's happening right out of the gate of the open? Uh Comes something in mind. Keep in mind, the most liquid point of the entire market is at the open, right? So if there's big institutions that have large positions in semiconductors, they're going to use the open liquidity to get out of their positions, right? I mean, that's how I would do it. If I had a large position, you can't move it midday. Look at this, for example, right? Then midday the volume is a lot lower. So there's ways, there's strategies they use to get out of their positions, but using the liquidity at the open is a big one to sell their positions. And what are we doing here? The moment the stocks open, we had big gap ups, right? Gap up 4%, sold off. This one, not a big gap up, but 1%. I think in the pre-market we were testing around here too, sold off, right? So these are signals here, the distribution on the daily chart, as well as the recent days, the market, whoever is, moving the market, institutions that are likely holding semiconductors after this large run are using the open right now to get out of their positions because they probably see the writing on the wall that we're going to be breaking down here. It's more of a matter of timing on than it is when, in my opinion. So something to be watching here. We're likely going to be at least testing the lows here, probably on semiconductors, and I'm still going to be looking to short them, honestly. And this Soxel, I mean, like I said, I've never traded 2x and 3x ETFs this long, but I mean, the range is just incredible. Even yesterday on a $150 to $180 stock, we're giving 34 points of range. I mean, it's just incredible. It's really a great vehicle, and it allows you where you don't need to pick and choose, like, oh, I'm going to trade MU, NVDA, et cetera, et cetera, et cetera. You can just kind of focus on what's going to move with the entire sector, and it's giving amazing range and trading correctly. Green to red, VWAP 9 EMA pullback, bear flag 9 EMA pullback. Great entries throughout the day here. To the short side. So I think that's something to be watching here. I'm going to still be looking short on this. Remember, we use the semiconductor ETF levels versus the SOXO levels. These are just going to do, for example, don't worry about the breakdown under here. That's a little irrelevant. It's going to do what this does. So we want to see the breakdown under here, which the prices don't exactly align. Like this 150 is not going to exactly align with the 573.72 low. So, but use the semiconductor F, keep them up next to each other, and watch the levels on this one, which is not as clean. It'd be nice if it was Soxel, but this is going to be what moves the Soxel. Another reason too we're breaking a little lower. Taiwan Semiconductor had earnings out this morning, so this could be shortable. I don't trade this one very often. It's not my favorite price range, but it's there, and this is definitely in play. You could be watching this. I wouldn't chase it down. I mean, like I said, you can do what you want. It's not my particular cup of tea, but this is going to cause some weight, weighing down the semiconductor ETF. So just another negative to keep in mind here. So we talked about NBIS yesterday. It was not as clean of a trade as we would like. VEE was another one on our watch list, much cleaner short yesterday. We had the large breakdown on that. I think at its lows yesterday we were down 37%, right? So we talked about it as being a breakdown into the huge push, looking for the green to red. It worked out perfectly. The retracements were a little bit larger than we would have liked, but opening range breakdown goes green to red, pushes back up. Really, it then eventually started to trend at the end of the day, and that was a little bit of the easier entry. I wasn't at the computer at that point, but that worked. NBIS was another short, which worked as well, but it didn't get as big of a breakdown as we would have liked here. And then eventually when the market did get its large bounce, it kind of probably held up NBIS. I still think we got to remember this is a news failure here, gapped up on news, broke down. I think this will move with the overall technology and semiconductors. If those break down, these are in that category of stocks that have done really well over the last year and a half. I think this can go lower with them. So still on watch for this to break lower here. We can still be kind of watching this 190 area for a short. Yeah, so I think keep that in mind as something we'll be looking for. I think we can be looking for opening range breakdowns on that. We can be looking for pulls into the 9 EMA once it opens, and a fail against that. Those will probably be that and Soxel will probably be the two main watches I'm watching today for trades. I'll probably be trading Soxel, like I said, just because it's easier. Now it's getting a little long in the tooth on the downside here. We're gapping down SMH 3%. So we're going to probably want to wait for a bounce instead of just shorting off the open. Like I said, it could work, but it's not a good rule of thumb to do long term to be shorting down 3% on ETFs. So I think we'd look for a bounce to short into would be ideal situation. And like I said, what do? We let it push, runs into its intraday moving average, take a short, cover some, and see if we can get into like a longer term move downward, right? That's kind of the plan always in the day trading. We put ourselves in stocks that are providing great volatility. We find the intraday setups that align with like the direction that we believe the stock is going to go. We cover some, and then we put ourselves in a position to find out if we're right. And if we are, we usually get a 3R to 4R reward on that. So because the initial point is we're trading stocks that are providing such great range. If you're not trading something that gives great range, the strategy doesn't work then. The volatility is everything because you need to be rewarded for when you are right. And then even then, if you have like, for example, I only have a 34% win percentage, it doesn't matter because the wins cover the losses by such a large margin that it allows you to be profitable on the long run trades. So it's like lose 100, lose 100, make 500, 600, lose 100, make 800, lose 100, lose 100, make, whatever, So that's kind of the mindset on that. The other one I wanted to look at here is this ASTS here. So they announced, let's go to this color. They announced another offering here, right? Whatever, private offering, 1 billion, yada yada yada, right here. I did a little bit of math on it before I hopped on here, but essentially it's depending on how people depending on their decisions on whether they want to take cash or shares in the long run, or a combination of both. It could be anywhere between 4 to 4.8% dilution. Now, the reason I have this from last February 12th, this day right here, right? We had this gap down here. What does that mean, right? So we had another offering of 1 billion private offering right here. So we don't need to get into the logistics of the offering. You can go into that and look into that if you really like to. A lot of this doesn't come due for a while, and the implications on the immediate trading are a little bit complicated and not really clear, and I'm not sure are that relevant to day trading necessarily. But it's a good catalyst right now, a huge breakdown in structure here, right? So, like, what has this stock done, right? This stock has gone on a multi-year run now from $1 to 130, about 6,500% up, right? So it's got a massive move. And now what has it done? It entered a distribution phase. I would call it now a distribution phase. I think it's kind of clear that it entered a distribution phase, which is the opposite of a base. It's more of like a stock has made its run and cannot move higher, tries to break out, sells off, which is kind of what we're seeing in SMH right now, right? Tries to break out, sells off, tries to break out, sells off. So, but this has a little bit more of a catalyst to it. So now it's done 2 offerings, right? And I did the math. If, like I said, they can take a combination of cash. It depends on the price point of the stock when they become mature, the offerings and things like that. We don't got to get too into the weeds with that. But what is the point here, right? The point is this company is raising cash right now. The price has gone up dramatically. And smartly, they are using this opportunity to raise cash for their business. Like, you got to remember, these are real businesses. You know what I mean? They're stocks and tickers to us, but they're real businesses, and they need cash to operate. They are diluting the shares and taking in a few $1 billion to run their business, right? And smartly, honestly, because this stock has gone up a ton. And even if you just look from a market cycle perspective, the market has been on a great run. And I mean, I know I may come off a little bit bearish all the time, but the market is probably closer to a longer term top, in my opinion. I mean, it's tough to say. I don't really predict out years like that. And reality, when it comes to investments, I think you should base them off the company more. But the market itself might enter a longer term correction or consolidation. So it's smart for these guys to choose their time to raise capital when the stock has gone up 6,000% and the market has gone up, over the last 2 years, 83%. Remember, average return about 10 to 13%, depending on your ETF and market you're tracking. So that's gone up on average 40% per year the last 2 years. So the market has gone up a lot. ASTS has gone up a lot, and they're using that opportunity to raise capital to fund their business for the long term. Now, as a day trading opportunity, right? That's what we're here for. Big breakdown in structure. What does this mean now? Every single person since December who has purchased this stock now over the last 9 months, whatever, 8 months, is now underwater. I mean, unless they were averaging up, right? But everybody who has purchased now in this time is now is down on their money. Now we've done a second offering in dilution. They're seeing that. They're seeing this breakdown of structure under $60. There's enough people in this situation that may want to bail, right? I mean, it's also worth noting that it had a kind of a run into this 26%. But now, from a psychological perspective, the writing's on the wall. They're doing offerings. We're breaking down structure. I think there is a potential short in this. Offerings can always get a little bit weird because it might be that the company needs money, and that can actually be presumed as a positive. So I'm not going to shorten the hole here, but I might look for a bounce at the open to short into. Ideally, we push up a couple percent into this 60, 61, 60 area, and we get a pattern, a setup intraday pattern that we can short against. And I think this breakdown in structure and the fact that all these people are underwater, there's going to be people that are going to be looking to sell into that push higher, and then we can kind of play into that momentum and short with them and kind of ride the trend down a little bit. So I actually think, yeah, ASTS might provide an opportunity with this fresh offering, and Soxel, I think, are going to probably be the two shorts I'll be watching today. So, video's getting a little long in the tooth here, so I'm gonna end it now. But you guys have a great trading day, and I'll see you tomorrow.